Barbara, as you know, timing the market is seems to be a fool's errand for most. What are you telling clients then that they should be doing exactly?
We're actually holding on to our positions. We are not rotating away from the U.S. We are out of our U.S. small cap and mid cap positions, and we're also giving ourselves some degree of freedom within credit to go back into it if things get a bit better later on this year. But for right now, we're holding on our positions, and we're giving ourselves some room to buy some things that are beaten down in the smaller mid cap universe a little bit later this year.
Hey, Dan, what do you think of that? A third more to go?
Andrew, when we look at the market, we see a lot of opportunity at current levels. And if we think about the technology sector, the same underlying drivers are in place. Look at the innovation and the growth in key areas like the cloud, mobile, really this build out of the digital infrastructure. We saw last night the durability of Microsoft's platforms such as Azure, which remain healthy. If we look at Apple later this week, sure, supply chain is going to remain a factor for them and many others in the very near term, but we're seeing a continued broadening of the revenue drivers. iPhone remains very healthy, services, wearables, a lot of innovation in areas like the Mac with the new silicon. And then if we look out into next week with Amazon, the e-commerce business certainly has very difficult compares in the near term, given the strength during the pandemic. But the Amazon Web Services platform, which targets enterprise customers, remains very robust. Google, which will also report next week, or Alphabet, their Google Cloud platform, which focuses on enterprise customers, remains healthy. YouTube is very strong. Search continues to remain very robust. So we see a lot to like at current levels in the sector.
So what are you buying right now?
Yes, we're buyers of these names here right now, Andrew. We see opportunity over the next 1 to 2 years. Of course, I and all of us appreciate that the near-term dynamics around supply chain are going to remain difficult. If we think about interest rates and inflation, yes, interest rates are likely to move higher, but even were they to be 3% on the 10-year, historically, when one thinks about it in that context, they're still very, very low. And if we look back over the last decade, the innovation and the growth have mattered more than rates.